Hi everybody. This is a video on the correct net profit. My name is Dando, and let's get started. So I'm just gonna show you guys a method on how to do this. It's pretty simple. So you're gonna do this. Is equals to a plus, minus. It's also equals to a minus. Is equals to a plus. All right. So this is the method I wanted to show you guys as to how you're gonna calculate the correct net profit when doing that question. So this is the side where you're going to have your income and expenses. And this side would be the treatment so this side would be the treatment in the income statement, right? So remember, you're doing the correction of a net profit. So you're not doing an actual income statement. And then, so let's look at this. So here, your pluses are going to obviously indicate your income, and your expenses will be indicated by your minuses. Right. So this is what you need to know. So you have prepaid expense, you have deferred income or income received in advance, you have accrued income or receivable income, and you have accrued expense. So this normally applies to these four items, right? Because the other items, such as your provision for bad debts, adjustments, you would have to just treat it as normal. But then here, this is where you have to be careful. So let's do this. Prepaid expense, underline the word expense. So it's a minus, right? So it falls under the one of these two signs, right? Now treatment in the income statement. So for a prepaid expense, what you normally do in the income statement, you subtract that because it was paid, for it was paid in the current year, but also takes into account for the following year. So that's why you need to subtract that. So it's a minus, and then we subtract it in the income statement. So minus, and then it's going to be a plus. So it's this one. So this guy is for the prepaid expense. I hope you guys understand. All right. So now let's move over to the deferred income or income received in advance. So firstly, it's an income, right? So it has to be one of these two items. It's a plus. It's an income, right? Now, an income received in advance. Say for example, you have a tenant, and then that person decided to pay for 13 months, and there's only 12 months in a year, so there's 1 month extra. So he paid over. So you have to subtract that because that's not your money. It's actually the tenant's money. So it's more of a liability in a sense. That is why for income received in advance, yes, it's an income, but you subtract it in the income statement. So income, but you subtract in the income statement. So it's a plus and a minus. And then outcome would be a minus. So here, this guy would be income received in advance. Right? So now let's look at accrued income or receivable income. So now for this one, it's very easy, very straightforward because it's income receivable. So basically, you have a tenant. This person paid for 11 months but there's 12 months in a year. So at the end of the year, there's still one month that's outstanding, so he hasn't paid in that month. So it becomes income receivable because you still are in a position to receive that income, yet you haven't received it. So it's income receivable. So underlying income. So yes, it's an income. So it's one of these two. Okay, so this guy is taken. So it's this guy, right? So it's an income. And then what do you normally do with an accrued income in the income statement? You add it, right? So it's plus plus. The outcome will be a plus when doing, the correct net profit, accrued income. I hope you guys understand. And then obviously the last one would be what's left, which is minus plus. But let's talk about that. So it's accrued expense. So it's minus, expense is a minus, right? And then what do you do with an accrued expense? Say, for example, for rent expense or insurance, things such as those, you add it to your original. So it's an expense, yes, but in the income statement, an accrued expense, you add it. So that is why the final outcome would be a negative accrued expense. I hope you guys understand. All right. So let's move over let's do an example. Okay, we have here a document, a past paper actually. So we're just gonna be looking at question 1.2. It says, question 1.1. So it says calculate the correct net profit after tax for the year ended 31 December 2021. Indicate plus for increase and negative for decrease. Very straightforward, right? So another thing to note is for this one, okay, don't mind these silly calculations. So let's talk about that one. Like I said before, the other items that do not fall under this category of prepaid expense, income received in advance, accrued income, and accrued expense, you just treat them as normal. So we'll see as we go along, right? So now we have this information. We have information A, B, and C. It probably goes over to the next page, but let's look at this. So now we were told that the following adjustments and additional information had not been considered when the net profit before tax of 1,738,780 was calculated. So now this is obviously a correct net profit question. So now we have the situation here. It's very simple, very straightforward. So it's 1,738,780. So that is our starting point, and then everything else will be working from there. So now let's look at the first bullet. Bullet number 1 says, on reviewing the improvement in the slow-paying debtors, it was decided to decrease the provision for bad debts to 13,640. So now let's talk about this to and by situation, because it seems it's a problem for most accounting students. So for bad debts and provision for bad debts, the to means that amount that you're given there, that's the final amount, right? But then the by means that amount that you're given there when you say by, that's the difference that you need to calculate it by. So hopefully that makes sense. So let's talk about this. So we have in our table trial balance, we have our provision for bad debts on January 2021. And like I say to my students, is the most important thing, especially when you're doing questions, because you're not always going to be given that 28 Feb, that March and 28 Feb story. Here, we're given that the year end is 31st of December. So it's very important to note that, because that means the year starts in 1st of Jan 2021 to 31st December 2021. Right? You need to understand that. Okay, so at the start of the year, we have provision for bad debts as 18,940, and then they say it has to be decreased to 13,640. Like I said, the 2 means it is the final amount, so we need to find the difference, right? So anytime you're decreasing a provision for bad debts, that's automatically an income, right? So let's start. So we have 18 940, and then minus 13,640, and that gives us a value of 5,300, and this is an income because you're making a less provision of the money you're not going to get from your debtors. Hopefully that makes sense. So this is a provision for bad debts. Adjustment. Hopefully you guys understand. Now we go back to the question. So we have this initial amount of 1,738,780. We're just going to plus it because it doesn't fall. Remember, it doesn't fall under that category that I told you guys. So it's plus 5,300, and then we move on to the next one. Now, bullet number 2 says, according to the profit and loss account, insurance includes an annual premium of 58,680, which was paid on 1 March 2021. So annual, it's very important. Annual premium. Annual means 12 months or 1 year, right? So obviously in accounting, we mostly work with months, so we have to look at that situation. So it's 12 months, right? And now it says it was paid on 1 March 2021. So it's obviously within this timeline, right? Now, if it's 12 months, if it's annual, meaning it was paid for the period of 1 March 2021 to 28 Feb 2022. Do you understand that? So we have to find how many months was this prepaid, because remember, it's an expense. So we prepaid this expense, right? Do you guys understand? Now I'm going to show you guys a method called the amount times unknown over the known method. We're going to talk about that now. But let's just find how many months are from December to Feb 2022. So that is 2 months, right? Because it's Jan 2022 and then Feb 2022. So it's 2 months, 2 months in advance. So let's take that into account. So let's look at this method. So it's called the amount times unknown over the known. You guys understand? So now let's do this. So we have the amount is 58,000 as given for the insurance. So it's 58,680. The unknown is 2. We're dealing with months, so it's 2 months. What we know is that this, remember, the bottom must always match the top. So this is what? 12. Remember, it's an annual insurance premium. So it's 12 months. And then that's how you do it. So it's just 58,640, or this can also be simplified to 1/6. So let's find that amount. So it's 58,640, 680. Multiply by 2/12. And then you have an amount of 9,780. 9,780. Now this is a prepaid expense, right? So it falls within this category of a prepaid expense. It's an expense, hence it's a negative. And then how do you treat it in the income statement? You subtract it. That is why it falls under this right here. So the outcome would be a plus. So you're gonna just gonna plus that 9,780. So plus 9,780, and then you're done with that. And guys, over time, you're gonna get faster with this. This is just for explaining and everything in between. So now, bullet number 3 says, Luca forgot to record the interest from the loan statement. Interest is not capitalized, meaning it's not added to the initial loan amount when interest is calculated. The terms of the loan agreement require a 240,000 Rand capital repayment each year. So now, for this one, guys, this has nothing to do with an income statement. Remember, income statement just deals with income and expenses. There's 240,000. You're just going to take it to the bank statement. There'll also be another video for that one. All right. So all we have to do is find the interest. All right. And interest on loan, as you know, is an interest expense. All right. So you have your balance at the opening, balance on 1 Jan 2021. 1,120,000, and then you have your repayments. These repayments include the interest. Do you see? So now I have your balance on 31st December 2021. Don't know if you guys understand. Right? So now sometimes you could actually find the interest by looking at the trial balance, and you'd be given the loan, and then you'd have to find the difference. But look here, the loan is given as 880, and then we also have the balance as 880. So now, how do you find the interest? Simple. You just work backwards. Remember, the loan is done this way. So you have loan at the beginning. You have your interest, repayments, and then loan at the end. Repayments are always in brackets indicating subtraction. And we have 880. So now we have our repayments of 319,200. And then we have 1120. Now, sometimes you would be given the percentage interest on loan, right? Sometimes, not every year. So now, do you see that we can't necessarily find the interest because it's already included here? But now we have this piece of information that it's the capital repayment is 240,000. So all you have to do, you just find the difference. So it's 319,200 minus 240,000, and then that equals to 79,200, and then that's your interest expense or interest on loan. Now, it doesn't fall under that, category. So what do you normally do with an interest expense? Treat it as normal. Subtract 79,200. Hopefully you guys understand, right? And then let's look at the next bullet. It says on 31st December, the rent income collected was 109,800. This includes rent for January and February 2022. The rent was increased by 8% on 1 July 2021. Now, for some learners, this could be, a very tough question, but I'll have to show you a method on how to calculate this one. Right, let's first identify. See this part. It says January and February 2022, and it says rent income. Is that not income received in advance? Yes, it is. And then what did we say about income received in advance? It's an income, hence it's a plus. And then how do you treat an income in the income received in advance in an income statement? You subtract it. That is why here it is. Plus income subtracted in the income statement, the final outcome would be subtraction. Now, let's look at how to calculate or deal with this type of question. So now, I'll have to show you guys a method. It says, sorry about that. On 31st December, rent. So the amount is 109,800. 109,800.